let's talk about IFRS 16 leases in today's class. So what exactly is lease? A lease is a contract that gives the customer the right to make use of an asset, an identified asset, for a period of time in exchange for consideration. Consideration, that is payment. It gives you, the customer, to make use of an asset, an identified asset, in exchange for a period of time. Okay, so let's break it down one by one. A lease gives you the right to make use. You have rights. It actually gives you rights to make use. Okay, so if maybe I have this bangle and you've been eyeing it, I know from the way you're even looking at me, you've been eyeing this bangle, and then you find a way to color it. Do you understand? You now purified it, you stole this, and you're making use of it. Nobody gave you the right. Okay, the right was not, it's not legal, it was not agreed. You did it, you find a way to maneuver your way through. That is not lease. A lease must give you, the customer, the rights. You must have that right to make use of that asset. An identified asset. The asset must be identified that this is the particular asset that you have right to make use. Do you understand? So if for adventure you find yourself in a situation where you feel like you're in control and you don't even know what you're controlling, that is not lease. The asset must be identified. Do you understand? Like, this is what I'm controlling. You must have that asset, specifically, explicitly stated, like agreed, like identified, like singled out. Most of the time, usually in a contract, a documented contract written down. So in there, this is the asset that is being given to the lessee. Do you understand? So the asset must be an identified asset, and then you're not just controlling. You must have the rights to actually control. So the vendor or the owner of the asset must have transferred his rights over that asset to you to control it for a period of time. Okay, in exchange for consideration. Do you understand? You must have controlled past that control for you to make use of the asset for a period of time. Do you understand? In exchange for some amount of consideration. That is, it could be payments, it could be, just make sure that there is consideration for that asset that is being given. So this is like three key things: rights to control, rights to control an identified asset for a period of time in exchange for consideration. That is what lease is. Okay, so what's the most simple case to you? So let's assume that someone gave you something, someone gave you an asset, someone gave you something like a generator. Let's use a generator. Someone lent you a generator. That generator now is the asset that has been identified, and the person gave you rights to control the asset for that period of time. Okay, let's assume your neighbor gave that to you because you guys have not been having constant light and you needed light to probably get some project done or some work done. And then the neighbor gave you this generator. Do you understand? That's more, I passed my neighbor generator. And then your neighbor lent it to you. That asset is the identified asset. And then the neighbor transferred the right to you to make use of that asset. Do you understand? Let's say he gave me for a period of time for about 2 months. He said, you can make use of this for 2 months until you get your project done, the project that needs constant power supply. And then you guys have an agreement. So within that 2 months, Oga, you are the only one that should have rights to control that asset, that generator. Your neighbor should not wake up in the middle of the night and tell you that, oh, my girlfriend just visited and there's no light, I need to make use of this generator. And although the project is still running and you need to make use of the generator, and then because it's the Lego owner or the actual owner of the main person that bought the generator, and then it's like, please, I need it back, just give it back to me, I need to make use of it until my girlfriend goes, until my mommy goes, until my village people that came from the village to visit me and the city goes, because I need to do some paparazzi, I need to show them, say, now they run this town. Please, that is not lease. For a lease, for that period, that stated period of time, you, the leasee, you have rights, you'll be in total control. Yes, absolutely. Like, you are the one that will have right to control that asset for that period of time. The lessor should not be able to pop in and out anytime. Be like, oh, please give me that generator. Let me make use of it for some time and then give it back to you. That's not lease. Or for lease, the lessor must have passed the rights to control that asset to you. I know I'm the owner. Yeah, I know I'm the owner. But for this period of time that we have agreed, I'm passing over the control for you so that you can be paying me, a stated an agreed amount, maybe annually, maybe monthly. You understand? In exchange for some consideration. So the right to control must have been passed to you, the lessee, to make use of. Do not forget that you must have rights to control that asset. Yeah, no, we talk about. Yes, I'm not the one that said it. That is IFRS 16 said you must have rights to control that identified asset. We don't want you being uncertain. Some people are just in situationship that they don't even know what's going on there with their life. They're so uncertain of everything. No, that's not IFRS. IFRS, everything must be stated, everything must be sure, everything must be certain, simple and plain. We don't want double story or stories that touch, or it's like not. No. Is it the man or is it not the man? Do you understand? Is she your girlfriend or not? I said not like it's somehow it's a long story, it's complicated. No, we don't want any complicated story. It's that simple. Do you have rights to control this asset? It's simple. Can you just wake up any day you want, put the gen in the night, put it in the morning, off it when you want? We are controlling how that asset is used. That is us, okay? The next one is that it has to be for a period of time. We've agreed that you will use it for 2 months, okay? And then that generator, you are using it in exchange for some consideration. You are paying your labor. Yeah, maybe you are giving him $100 every week, $100 every day. You are paying for making use of that generator. That is lease. It's simple. Right to control, period of time, in exchange for consideration. So we move. So control means that you get substantially all the economic benefits. You are the one that is getting all the benefits. Substantially, that's what control means. Control doesn't mean like Lego ownership, because I may still be the owner of that generator, but I've given it to you. Your neighbor has given it to you for a particular period of time. Control simply means for that period of time that you can put it on anytime you like, in the morning, in the night, when your girlfriend visits you, put it on, when you have your project running, put it on, when your fiance visits you, put it on, when you have your village book comes over, put it on. When you want to do some apparatus and show your street view, say you're in control, put it on. You have right. You're enjoying substantially every benefit that is accruing from that generator. And as you're running the project, you are most probably getting income for that project you're doing. So you're enjoying all the economic benefits. Not the Lego owner. The Lego owner is no more in the picture. The only thing that is getting to him or to her or to the company or to the entity is the obligation, that payment you are making in exchange for making use of that generator. That's the only thing they're getting, okay? Also, control means you can direct how. You can direct how and for what purpose the asset is used. You can direct how to make use of the generator. Yes, you understand? Not maybe your neighbor will be like, I know I've lent this generator to you, but before you do anything, before you can put on the generator, just still come and get additional permission from me. Still come and that is not lease. So for this, you have transferred the right to you for that certain period of time. You can direct how the asset can be used and for what purpose. You can decide that, oh, I want to put on the generator to use it and run my project. Oh, I want to put on the generator because some friends visited. Oh, I want to put on the generator because my village people are coming. My uncle that refused to pay my school fees is coming over, and I need to show him that I am not just in the city. I'm now a big boy. I've arrived. You get what I'm saying? You get what I'm saying? So control means that you get substantially all the economic benefits, and then you can direct how and for what purpose the asset is used. And so this week is messing up because I'm in a hurry to get this video done. I don't want to keep my friends waiting. So examples is that some of the assets that could be leased, it could include buildings, offices, factories, vehicles, aircrafts, ships. All this can be leased. So when do you recognize a lease? At what point do you recognize a lease? You recognize a lease at the commencement date of the lease. At the commencement date. Let's first of all, what exactly is commencement date? What do we even mean? Don't forget that you recognize a lease at the commencement date. So what is the commencement date? The date on which the lessor makes the underlying asset available for lease by the lessee. It's that simple. Okay, you made an agreement with your neighbor. I'm going to use this generator. Your neighbor agreed. I need to start using it on Monday, and then maybe you sign the agreement on Monday. But you know the generator. You didn't even see the shadow of the generator until Thursday or Friday. That was when your neighbor brought that generator. Or maybe when he told you the generator is not available, you can come and pick it up. It's now, he has given, it's now available for you to come and make use of it. Do you understand? That is the commencement date. When it's available for you to make use of. Do not forget that word. Available. That is the key word. It must be available. Although maybe you've signed this contract, you've done the agreement, all the documentations, everybody has stamp up and down. But you have not seen the asset. The asset is not within your grasp. You can't even make use of it. My friend, calm down. You're not in control. This has not started. So the commencement date is the date on which the lessor makes the underlying asset, that is the asset that is tied to that contract, that is tied to that agreement, available for use. When you can use it. When you don't forget, this is very, very important for people that are claiming ownership of things they cannot make use of. You might be owner, but you can't use it. Anyway, maybe we'll not talk about fake lifestyle. Maybe we'll just move on. This is very, very important, okay? Because it is the date when the lease starts to recognize the lease on the balance sheet. It is at that date that you can bring it into your books. It's very, very simple and realistic. Yes, now, because why will you recognize an asset that is not available for you to make use of? Doesn't necessarily mean you must start using it immediately. But if you want to use it, can you make use of it? You are claiming this is my asset. Do you understand? This is my asset. I can make use of it. I can gain economic benefits from this. But you cannot make use of the asset. It's not available for you to use. That means it's not your asset. You don't have rights to make use of it at that particular point in time. So until it's available for you to make use of it, that is the date. The date that you, the leasing, you start to recognize it on your balance sheet. Do you understand? It's that simple. Not the signing date. not the contract date, not the date of agreement, but the date it becomes available for you to make use of it. Do you understand? But when the asset becomes available for use by the lessee, do you not understand? Because many people used to confuse this commencement date with the inception date. Inception could be the date you made the agreement, the day you signed, the day you did the documentations, the day both parties agreed, the lessor and the lessee, the both companies, you understand? That is the inception date of the lease. But when it becomes available for lease, according to IFRS 16, that is when you bring it into your books, okay? So inception date, simply put, is the date the lease agreement was signed. Commencement date is the date you can actually enter the building. The date they have handed the keys to you. You understand? The date they have handed the keys to you. The date the keys have been delivered to you. So now, if maybe you are in Port Harcourt and the keys is in Lagos, but the keys have been handed over to you, like you're the one that is delaying picking it up, maybe due to logistics, due to whatever, it's within your care. Do you understand? It's not within your control. You can decide to pick up the key, you can decide to open the house, and you can still decide to keep the key and go and sleep, chill, rest from the stress of even getting the list done. It's all up to you. But what we are saying is, do you have the keys? The key, have they handed over the keys to you? Until you have the keys to enter the building, you have the keys to make use of that asset. You have the asset available for you to make use of. Please, please, we don't want to see it in your books. No, we talk about IFRS talk. I beg, until you have, the asset is available. That is when you can now start, pass my guide and showing off yourself, saying, I'm going to be the proud owner of this. Yeah, at that time, we will go agree, we go calm down, humble, follow you, agree. Finally, now you get this asset. You can bring it into your books. It's that simple. All right. Another thing you must note is that payments, holidays, rent-free periods do not affect the commencement dates. Once the asset is available for use, it's available for use. Please bring it to your books. You don't want to care whether you have rent-free periods, whether you have they have given you holidays for payment, don't pay some things or whatever. It's not changing anything. As far as you have the lease, I beg, the lease has commenced. You have the keys, the lease has commenced. Recognize it ASAP. We will not even talk them 2 times. Do you understand? So at the commencement date, 2 important things must happen. From the aspect of the lease account, 2 key things must happen. You must recognize a right of use asset and you must recognize a lease liability. Recognize right of use asset, recognize lease liability. Is that simple? Recognize right of use asset, recognize lease liability. See the way I'm dancing like this. Just as if I'm singing, it's dancing. Is it? Recognize right of use asset, recognize. It's very, very simple. I know, because some people will say I do not talk. I don't talk. I'm saying it now. At the commencement date, what IFRS wants you to do is very, very simple, so that there won't be issues. Recognize a right of use asset. You have rights to make use of that asset. Even though, when we talk, I'm like this, so you guys understand. Even though, say, let me buy the assets. Legally, I'm the legal owner. Let me have the legal documentations. But for this period that I've transferred the asset for you to make use of, recognize your rights to make use of that asset. It's simple. The asset you're recognizing is called right of use asset. That's what it's called, because you're making use of that asset for a particular period of time. And then the corresponding lease liability. Don't be every time take. As I take and give, as I take and giving. You guys know what I mean. So as I'm making use of the assets, you have to be paying some things. As I enjoying, some people that used to do some things, taking high maintenance babe. As I enjoying the what's it called? The high maintenance vibe, you're also paying some things, some money will be come out for pocket. So this applies to almost all the leases. So once the lease starts and you get control, you record assets, which is your rights to use it. The next one is your liability, which is your obligation to pay for it. Not be just assets. As they collect, they give. As they collect, as a making of the assets, that's some liability. The person will give you the asset is not mumu now. The asset is useful to them, but they're only giving it to you because you're going to pay some bucks. Do you understand? Some cash. The business is getting from that lease payment you're making to them. So as you're recognizing the asset, please recognize the liability, A and B. Like, do not leave anything. And we want to see everything that is happening. Yes, we are busybodies, so we are busy. Yes, we must see. So recognize the asset, that which is the right to make use of it, and then the liability, which is your obligation to pay for your right to make use of it. So who applies this? This recognition rules apply to lease accounting. Yeah, all these things we've stated so far is applying majorly to lease accounting, because that is where it's most complicated. The leasing, that's where it's you that's when to lease the asset, due to whom the lessor gave the asset to. All these rules we just said now is applying to you. Do not forget it, to you. All right. So lessors still use operating versus finance leases. That was what I was mentioning earlier. Lessors still use operating and finance leases. They must still do this classification under the applicable criteria. They must still decide, is this lease that we've given out, is it lease or is it financial lease? And then based on that, they can bring it in or they can put it off the balance sheet. But for the leasing, which is where the main cocoa is, do you understand? No more finance, no more operating lease. So in our next video, we are going to dive right deep into what right of use asset is and what lease liability is. So till then, stay tuned and take care. The entity control is a 315
say understand.